You're listening to the Option Alpha podcast from OptionAlpha.com, where we show you how to make smarter trades, learn how the stock market really works, and generate consistent monthly income. Now, your host and head trader at OptionAlpha.com, Kirk Duplessis.
Hey everyone, this is Kirk here again from OptionAlpha.com, working every single week to make this the most popular investing podcast offered online because it's based on one thing and one thing only, and that's helping you guys make smarter trades. So again, thank you so much for tuning in today. On today's show, I've literally got an Option Alpha rock star with us in MACDDaddy, as he is commonly referred to throughout the entire forum and through the website. Many of you know who he is, or maybe he's even helped you out before in the past. But today, I'm going to be bringing him on the show to talk about the wheel strategy. And this is a strategy that he has used for a long time. It's not his strategy that he necessarily developed, but I think he does a really good job of helping out with other members in this. And this has obviously been a big topic in the forum. And so I wanted to bring him on because he's really, started some pretty in-depth threads on how to get going with this. And he's used this himself to generate some really good returns in his own portfolio. And so more often than that, or more even than that, what I want to do is really spotlight and highlight him. Rob is a guy that came to Option Alpha many years ago. And when you build a company like this and a web presence like this, sometimes I think on my end, it gets a little bit lonely in the sense that you are doing all this stuff and you're recording videos and putting out audio. And I get feedback from everyone, which is great. But there's people who, for me, I know are out there and I rely on them for support just as much as maybe they rely on me for support and guidance and help. And I can honestly say that as in building Option Alpha, that Rob has been one of those guys that I have leaned on many times for opinions, for advice, for guidance. And I always feel like it's a clear, objective, very smart, very rational thought process that he brings to the table, which I humbly appreciate. And so I couldn't be here without people like him and other people that we'll be highlighting on this podcast in the future because I want to start bringing on more of our members. But I think this is a great show to kind of start out with here today and kind of interviewing one of our own members, one of our own, family members here at Option Alpha. So as we get going through here, just realize again, everything that we'll have on today's show, we'll have on the show notes page and kind of lists and things that Rob MACDDaddy put together for you guys. So if you want to grab those, just head on over to optionalpha.com/show107. Again, that's just the number 107, and you'll be able to access everything and just kind of grab it right from there and take it and run with it. So without further ado, let's get into the show. All right, so MACDDaddy, Rob, welcome to the show, man.
Glad to be. Looking forward to this.
Yeah, man. So as I said in the interview, or in the intro, you're like a legend, right? We were just talking about this. I mean, you're the man behind a lot of comments, a lot of support. A lot of people look up to you. And so I am insanely glad to get you on and kind of talk about this wheel strategy, not only so that people just know who you are and kind of hear, what you're all about. Cause I think you're an insanely smart guy when it comes to this stuff and you've been trading and investing for a long time, but I think it's just an interesting topic that comes up again and again and again in the forum. So I think we want to give it a little bit more exposure and start talking about it. So why don't you start off with just telling everyone kind of who you are and what your progression is and, where you are in life. I know you're a fighter pilot. We talked about that before and kind of where you've come to, I guess, in investing.
Yeah. So not a fighter pilot, but we'll go into that a little bit. But I did fly in the Navy, but I grew up with two brothers and I grew up in Baltimore. Pretty normal childhood, nothing crazy. Baltimore, East Coast boy, all good. Go Orioles, all that kind of stuff.
Yep.
So I joined the Navy. I ended up going into electronics, and I ended up flying for a squadron called VQ3. So they're a Fleet Air Reconnaissance Squadron. So I was one of the electronic guys that ran the comm center in the back end of the plane. So
that's crazy.
I spent a lot of hours. Every time we took off, it was 12 to 15 hours in the plane.
Oh my God, that's ridiculous. Yeah.
I spent a lot of hours in the plane.
Yep.
What that did teach me, though, was flying. I mean, flying is all about discipline and being proactive and checklist. I mean, if you got an issue in the air, you need to have a plan before you get there. So there's checklists for takeoffs and landings and all of that sort of stuff. And so I really got into checklists, and that's how I really got in on my basic trading plan was really from the Navy and the checklists there. So I had a friend that got me involved in AAII, American Institution Association of Individual Investors. Great organization. They got great basic information for people in retirement, but it's the long-term strategy, retirement, buy and hold sort of strategies. And that was early on, and that was a great foundation. Got me into investing and just exploring and learning all that sort of stuff. So their main thing is fundamental based investing. Good stocks equals good business plus good finances plus good price of the stock. Right. So I worked at HP since 1992. So I've worked there 25 years now. That was a great place to work. Still is a great place to work. But I got early exposure into the internet and computers, when it was really exploding from the very, very beginning. I had an online brokerage early on, 1993, and I've gone through many brokers and ended up at TD Ameritrade from everybody that got bought out.
Yep.
I just fell in love with TOS. I mean, TOS is like back to me flying in the planes.
That's what people say. People say it's like a cockpit sometimes.
It is. And so I went on this little mission a couple years back, and I was just reading investment books, everything I could suck up. I ended up reading over 147 investment books.
Wow.
And what I can pretty confidently say is there's no holy grail.
So let me stop you there and just ask, because people ask me all the time, like every day I get an email about books. Like, what are the best books? So you tell me, like, what do you think the best books that you've read? Maybe like one or two that like really stand out.
Well, there's all the classics.
Or more than two. Or more than two if you have more than two, because you read a lot.
Well, there's a lot of books out there, and it depends on really what you want out of it. So there's the deep technical books that are, the option Bible, where they just go into the deep technical parts. And then there's the ones that are, the big picture kind of thing.
Right.
The one I am reading right now is called the Option Hedge Fund.
Mm-hmm.
And I like that one right now. It's a pretty broad plan for basically how to run your options as a trading business. And it looks at it in comparison to an insurance company.
Yeah.
And I really like that. What I really gotten out of these books is there's no really one book. There's one or two nuggets in each one of these books.
That's what it always is, though, right? Yeah, I mean, and I agree with you. I try to tell people, like, there's not one book. That's why anybody who's listened to this and has ever emailed me, my response is, I think all books are generally terrible, and you could probably get one or two good nuggets out of them. That's not like any book is amazing. It's just you get one little idea here and you kind of piece it all together.
Yeah, and that's exactly what I've done, and that made me feel comfortable. And everybody, how they piece it together, it's different for everybody. Right. So for me to actually say, that's why I kind of balked it.
Well, I was just kind of trying to put you on the spot.
Book.
Yeah.
Yeah.
Yeah. Well, good. Okay. So you read a lot of books. You started, doing some on a mission, right? So you're on a mission to figure something out.
I'm on a mission what I want to end up doing is I want to retire and I want to do this full time.
Gotcha.
So I have some older folks that I worked with at HP, and I'm looking at these guys and they are still working hard. And I'm like, oh my gosh, I need a plan. I need a plan early.
Right.
And so that's where I've really been driving to.
Gotcha. Okay, cool. So how'd you get started into options then? Because you traded for a long time on the stock side, right? And I think we had talked about before, I mean, you've been trading options for a little while now. So, but it's really kind of gotten, I don't know, hot and heavy, or I guess like, really, really intense kind of just in the last couple of years, you started like really, really focusing on options, right?
Yeah. So I've been trading options for about 13 years. And I did the normal progression. You start out with the covered call. So I was already investing long with the strategies from fundamental investing. I got into technical investing some. None of that really got me going. Covered calls, I started building that. And from there, it just grew. The last 3 years, so I'm 52. 3 years ago, I was 49. I'm like, man, I better step it up. Retirement is not as far away as it should be.
Right.
And so that's when I really started buckling down. And actually that year I had a goal And I've had the same goal every year was I was going to do a trade a day.
Nice. Simple, easy, something you can do.
Attainable.
Yep.
And I haven't done that. The first year I didn't quite obtain that. I mean, I was pretty close to a trade a day, but since this year, I'm probably 3 or 4 trades a day.
Nice. Wonderful.
So yesterday I did 11 trades.
And do you think it's just a habit thing that you have to develop, right? Like it's just
it's definitely a habit. It's also again, going back to the checklists and the routines, it's a routine for me.
Yeah.
So you get into a deal and you do this, you do that. You know, I'm trading between these hours because that's when I do this. I do this research during that time. I probably spend 15 to 20 hours a week with this. So I spend a lot of time with that. But for me, I mean, if I just looked at it as my second job, which I do, this is by far my best paying job.
Right.
This pays me better than HP.
Yeah, that's awesome. And I think here's why I like this, and I'll say this publicly while I'm saying this to you as we're recording this now. This is why I don't bring on a lot of people, because I don't want to just fill the airwaves here with not nonsense. Not that other people would spout nonsense, but I like that, what I appreciate about you is not only just you're a straight up guy, but you just, are doing this with working a job, you know what I mean? And you, make those sacrifices to, put in the time and effort and it's paying off, and that's what I think is so cool about it. So, okay, cool. So
this is not a magic thing. You put in work. And
what? You're kidding. You mean you can't just press a button and it just works, right?
Yeah. No, sir.
Yep. No, I get it. So, well, cool. So now you're putting in time, you're putting in effort. So let's start talking about the wheel, because I think that could start dovetailing into other sections. But so the wheel kind of came up and I saw it on the forum, right? And people started talking about it. And I'm like, what is this wheel thing? So I started digging in a little bit deeper, and everyone, I don't know how long the main thread on the wheel strategy is on the forum. And is it hundreds of comments now, maybe?
I think it's 220 comments.
Yeah. Okay. So a couple hundred comments now. And so let's maybe start talking about where this came out of and how you're doing it. Cause it's not just your thing, right? I'm assuming, right? Yeah. It's not your thing.
I did not come up with this.
Right. But it's what you do. It's what you like to do.
It's what I do.
Exactly.
Yeah.
Okay, cool. Yep.
And so let's just talk about the basic wheel and what it is and it is. So this is not the holy grail strategy. This is one of the strategies that you need in your toolbox for the different scenarios that the market's in. So that's it. Take it with what, you trade it how you want it. So
grain of salt.
What I like about the wheel is I look at it as a set of guidelines where you have some steps and you get to make choices all the way through these. And you can make it as simple as you want or very, very complex. But it's a really easy way to step through some processes. So in its simplest form, you start out with, hey, I like this company and I have a choice. I can buy the stock or I can sell the out of the money put. And you start with the wheel with selling the out of the money put. That gives you a little bit, you're getting money right away, and it gives you a little bit of cushion if the stock that you like, you already said you like, takes a little bit of a downturn.
Right. And
if it gets put to you, you already liked it.
Right.
So that right there, that's choice number one.
And
what stock do you want?
And that's basically it's the same thought process as a covered call in the sense that you got to like the stock, know the stock to some degree, and be okay with owning the shares.
Yeah. And that's how this kind of grew out of the forum was there was people that were talking about covered calls. And this is how I grew out of it also was I started doing covered calls and I was like, wow, what's kind of the step I can do before that? That's
right.
Sort of that fits into the same strategy. Then did some research and I found this strategy called the wheel.
Gotcha. Cool. Okay.
And so I sell the put. And so it goes to expiration and it gets put to me or expires. If it expires, I sell the put again. Goes to its expiration, expires, worthless, I sell it again.
Rinse and repeat.
It gets put to me, it keeps rinse and repeat. So that right there, fairly simple. And you can also, some of the choices here is you can determine how much you want to be invested time-wise. And what I mean by that is you can sell the weekly if you can get a decent price for it. If you want to be pretty active, you can sell them monthly. Be a little less active, you can sell it maybe out 2 months.
Gotcha. Yeah, and you're usually selling those like 20, 30 deltas out on the put side.
Yeah, and that's for me personally. Again, it comes back to how much you really like it. And if you really, maybe you want it to get put to you, maybe you sell right at the money.
Yeah.
So again, that's another choice on how much you really like the stock and how much you want to get put in.
Right.
So if the stock is taking a nice maybe downturn and it's sitting right there at one of maybe the resistance levels, one of the technical levels that you feel pretty good at, maybe you bump that delta up a little bit so that you're closer because you're already liking the stock down here at these prices and you might get a little more credit.
Gotcha. Yep.
So once you get it put to you, now you own the shares. So your first kind of thought process is, usually most people with assignment, they're like,
Yep.
So
Yep.
your first step is, do I want to own this?
Yeah. Well, first step is probably don't freak out, right? Like, because that's what people do. Yeah,
exactly.
Yeah. First step, don't freak out. Then ask yourself, do you want it? Do you want to keep the stock, right?
Do I want to keep the stock?
Right.
And what that does do is, it lets you evaluate why the stock went down. If the stock went down because the whole market went down, it's probably still a good stock.
Yeah.
If the stock went down because the CFO was embezzling,
right. You need to reevaluate that.
That's your choice to reevaluate and get out.
Yeah.
Right?
Now I'll pause here and say, so we went through, and you're a lifetime member anyway, so you know this, right? But we went through in the last 2 months, well, actually in the last 3 months, we've gone through assignments in TLT, assignments in FXE, and assignments now in OIH. And in each of the cases, we've chosen to hold the stock, where sometimes when we get assigned, we choose to, get rid of it and just close out the position. So I agree with you 100%. And I don't think it's worth overshadowing that you first have to make sure you want it for whatever reason. And so all of those for different reasons. But yeah, I agree with you. Make sure you still want the shares before you keep going.
Yeah. And if you don't want the shares, that's your time to cut and get out.
Right.
I mean, that's simple. So one other thing I would say, and this is maybe for the folks in the forum in particular, is don't freak out and do call the broker. So ask them what your choices are. You can't ask them for advice. They won't give you advice, but you can ask them for what are all my choices here? And will walk you through each of the choices and what the pluses and minuses of those choices are.
Nice.
And then you have to decide.
Good tip. I like it.
Yeah. So anyway, so now you have the shares. And so what do I do next? So the next thing you do is you sell the call. I want to own the shares. I like the stock. So now your choices when you sell the call is, how much do I want to own? I mean, how long do I want to own the shares? If I really want to get out maybe kind of quickly, maybe I sell the call right at the money. I'll get the most money. I'll have the highest percentage chance of it getting called back away from me.
Right.
If I want to make a little money, I can go further out because I think it's going to bounce quickly.
Right.
And then I would, whatever deltas I want to pick out of that.
Gotcha.
And then of course, the next choice is the time, how much you want to hold that call. The further out in time, the bigger the credit.
Yep. So now you would hold the stock selling these covered calls until basically you get the stock called away. Yeah,
that's how I do it. And if it doesn't get called away the first time, it expires worthless, I'll sell another call. I'll reevaluate again. Do I want to own these shares? Mm-hmm. And if I do, then I'll sell the call again. Then I'll sell the call again. Then I'll rinse and repeat.
Gotcha. So I like this because this basic concept, right, is if you get the shares called away by selling the covered call, you then go back and sell the put, right? That's the idea. Yep. And that really completes the wheel type circular reference that we're going to, right? Is that the idea?
Yes.
Okay.
Yes, that's the idea.
Gotcha. So now so here's a question and this is something that comes up a lot, is when doing like a covered call strategy like this, because it eventually gets into a covered call at some point, probably, or maybe, right?
Yeah.
And if doing that, do you prefer to do this on dividend stocks or on non-dividend stocks? Or does it matter?
That's a great question. So a lot of people like dividend stocks. I do a mixture. I've done some dividend stocks, what people would call dividend type stocks, but I really am pretty diversified in what I'm doing. Yeah.
Gotcha.
So,
and because I think the only thing to worry about is just the assignment of the shares for dividend and, on the short call, right? Which that's really, and it's manageable. You can work through it. But yeah, I get people all the time, I guess, asking that question like, oh, do I have to do dividend stocks? And so it's good to hear what you do. So,
you definitely don't have to. And that's one of the things that when you get into the call side of this is you have to be aware of the dividend and where it is and when it's expected out, just like you do with any call option.
Exactly. Well, and I think the cool part about this is that with like a growth stock, and I just kind of classify them as growth stocks versus dividend stocks. But with a growth stock that doesn't pay a dividend, it's a way to get paid in the process.
It's a way to get paid in the process.
Yeah, to reduce and collect some income along the way.
Yeah. In general, I don't like to do them with momentum stocks.
Right.
And that's just because they fly up and they fly down. So that's my thing. I generally like to do it with growth stocks.
Yeah.
The other thing that I like about this is it's a mechanical way, and it forces people to buy a stock low and to sell it higher.
I love that part of it.
You bought it lower because you sold the put. It got put to you at a lower price than you would have bought it anyway. If you get it put to you, you have the shares, you sell the out of the money call, it gets called away from you. You sold the stock at a higher price than you would have.
Yeah, that's what I think. I really do. And I think that's what, like that mechanical aspect of this type of strategy, I think is so key because, like you said, it's making the market force you to buy low and sell high, which is what everyone wants to do anyway, right? Like everyone wants to do that anyway. And it's forcing you to do it through your own options actions, basically how you're trading the options. Yep.
And you have a plan. It's a pretty mechanical plan. So these things that we've talked about, I wouldn't call them rules. I don't like that word. I like guidelines.
I don't either.
So rules are like, 20 delta, you're going to sell that. What you really need to look at is all the variables that go into that. Those are guidelines.
I gotcha. Yep. So once you get the shares assigned, right? Now there's a different layer, or you're calling it the advanced position basically. And that is, that's taking it one step further than just selling the call.
Yeah. And so this is where it gets into what we just talked about was the basic wheel. And so the other things that you can get into is some of the more advanced choices. So now I own the shares. Now, if my account size has the ability to own another tranche, another 100 shares, then what I could do is instead of selling just a call, I could sell a strangle, which is a call, and then even a lower put.
Yeah.
And so now I'm bracketing the stock that I own right now. And if I get called away, those shares go away, and I'll get the put, the premium for the put.
Right.
If it gets put to me, now I own 200 shares.
Right.
And then I would sell 2 calls.
Yep. And it just moves that.
You have to be sure that you have the account size.
Right. Right. Yeah. Yeah. And it's all going to still be within, kind of like guidelines for, position size. But I like, the beauty of doing this is that, if the stock has already dropped to where you're assigned, you sell a call. If you sell a put even further away, I mean, realistically, what are the chances that we continuously get, a 1 or 2 standard deviation move in stocks? I mean, it just doesn't happen that often, especially if it
doesn't happen that often.
Yeah, especially if you got a, pretty decent company that you're trading this on. It's not, it's not like it's going to be I don't know, I just see like Blue Apron, right? Like that stock is terrible right now, right? But I like that because selling the put also increases your break-even point on the call side too. You're just collecting more and more and more premium to reduce cost basis, which is what is the goal.
That's really the trick to this whole thing is reducing the cost basis.
Yeah.
So that you will eventually with a good stock, in my opinion, have a good shot at making money.
Yeah. Or take it to zero. I mean, some people have reduced cost basis to zero. They basically have owned shares for no value. They've collected enough premium. So, okay, gotcha. So now you sell, and you can skew this, right? Like that's what you talked about too. So let's talk about skewing. So when would you decide to maybe skew this covered strangle or covered straddle, however you want to do it?
Yeah. So when you talk about skewing, that's when you're looking at, again, your choices. I'll say I own the shares. I can own another tranche, but say I would like to get it called away from me pretty quickly. So maybe I put the call so it's at the money, but I sell the put that's, maybe, further down in the delta.
Right.
So maybe the 10 delta. But maybe I do it the other way. Maybe I think it's already at a resistance point, and I skew it the other way so that the put is maybe at the 40 delta, and the call is maybe at the further out, the 20 or 10 delta. So I can get that money back from those 100 shares.
Now, how would you decide to skew it? Would you use technicals? Is it just looking at the charts and saying, hey, it's made a 5% move lower, so maybe it might bounce? Like, how do you come to that decision? Because I think people want to know, and there's no right or wrong answer, obviously, and I'm sure that it's subjective, of course, but what's your kind of thought process on it?
So my thought process is I use a top-down approach. So my first thought is what's the overall market doing?
Right.
Because most of these stocks that I'm talking about, the growth stocks, are really going to follow the market. The market's going down, it's probably going to go down also.
Mm-hmm.
The market's going up, it's probably going to go up also. Individual stocks, do their own thing in there. But in general, if the market's doing one thing, 80% of the stocks are doing that same thing.
Right.
And we're talking, these are usually the big stocks. So that's the first place I start. And then I dig down a little bit into the stock itself. And I kind of look maybe at earnings when earnings comes up, because earnings can affect this also. And you want to be careful of what expiration you pick. So it's, maybe right before the earnings or right after. And you want to be aware of whether you want to hold it through the earnings or not.
Now, do you hold through most earnings, or do you get out at any point and then get back in, or what's your kind of take on that?
Yeah, my kind of take on that is I've done both, of course. But if I'm going to hold through earnings, then I usually go out further in expiration.
Yeah.
Because if it does do something, then it's going to have time to
recover,
normalize.
Yep. And we see that. Yeah, no, and I agree. And I see that. We see that all the time. And look, there's a million case studies on that. You can look on our site or anybody else's site where, stocks have a big move down and then, 30 days later, they're right back to where they started, or a big move up and all the way back around. So that's not uncommon for it. Not to say it always happens, but it's not uncommon for it to make that move. Right. So,
right. And I try and give myself the chance to let that happen.
Right. Exactly. Yeah. Give yourself enough time. Just give yourself enough time to be right and don't pigeonhole yourself. Okay. So what have we missed about this? So we talked about, the basic wheel. We talked about kind of like adding in this, this strangle or skewing it, however you want to do it, if you want it neutral or skewed. What maybe components have we not talked about that you think people or it's important for people to realize, or that they maybe miss when they're executing this?
So probably right at the very beginning is making sure that you have an account size. This is a pretty capital intensive strategy.
Right.
So you want to make sure from the get-go that you have the account size to do this. So you want to figure out if you're going to get put those shares, if you can hold them. Because if you're getting put a $19 share, you're going to hold $19 or $1,900 worth of stock. And you want to make sure if you have a $2,500 account, that's not a good play.
That's not a good play. Yeah. So we're still, and I say generally still under the 5%. I don't know if you still follow that or if you think that too.
I do. In general, when I get into maybe the secondary layer, I have up that to about 7%, just potentially 7%.
Yeah. With margin being held basically. Yeah.
But definitely the position size is a big deal. And actually get this question quite a bit in the forum. And for me, a lot of people are, liquidity is the number one thing. Me, it's actually position size.
Yeah.
So if you keep it small, you can be wrong.
Yeah.
And you will be wrong.
Well, you're going to be.
But you'll be able to fight another day.
Exactly.
If you mess up your position size, you could be done.
Yeah. You got to have enough capital to keep the lights on is what it ultimately has to be. Right. Yeah. Okay.
I like that.
Good. Yeah. Well, good, man. Well, this has been good. And I think it's been awesome just to talk about this. I know people will definitely enjoy, doing this. I think, I was actually writing, no joke. I was up at 4:30 this morning writing and you saw, I emailed you early this morning when we were scheduling this, but I was writing our covered call thing. And I was just talking about, how important the stock ownership is and how important cost basis reduction is, for a new, just mini guide on covered calls. And all these concepts are just, circling back and hopefully what people are getting out of this is that, it's a lot of the same concepts just applied however you want, really. I mean, it's,
right.
Do you want to skew it? Do you want to do the strangle or just do the covered call? And, neither one is necessarily more right than the other. It's just, a difference of opinion and what your outcome or outlook on the stock is. So,
and how much time you want to put into it.
How much time you want to put into it. But yeah, and that on that aspect too, I think this is a great strategy for people who like you are, working a job and, it's not I'm sure you do your other trading, every day, but this is something that you can, pretty much set up once a month, twice a month and kind of monitor, and you don't have to touch too much, right? It's a low touch thing.
And to that, so this is just my normal kind of routine. So you're exactly right. I usually set these out a month plays, and then I look at them on Sundays. Perfect. Right before our strategy call.
Yep.
So gets me in a nice routine. I just kind of feel where it is, and then I'm done.
Yeah, then you're good to go. Awesome, man.
Good to go.
Well, good. Well, I appreciate it. Well, let me end with maybe this with our discussion today, because we've gone about 30 minutes now, which is great. And obviously, people can learn more about this at optionalpha.com/show107, and you can of course sing your praises for MACDDaddy if he's ever helped you out, because I'm sure 100+ people. I get emails all the time about you. It's like this mythical legend in the forums, and so but it's good to get you on now. Let me just ask, maybe in all of your investing, what has been maybe a discipline or a thought process or some sort of ideology that you've learned that you think has really kind of helped you? For me, I have learned over time continuously that I'm really bad at picking direction, but that's okay. Right. So is there a thought process or methodology that just seems to keep coming up to you that you can, share with everyone because you've been trading for a while?
Yeah. So I'm not a pick direction kind of guy either. I mean, if most of the people have seen my trades, they're usually pretty neutral. But for me, the big thing that's made a difference for me is trading plan.
Yeah.
I'm a disciplined, I'm a routine person. That's just me. Some people aren't that way, but for me, it's been a trading plan. And I follow that trading plan. I go through it. My wife and I have a Sunday or a once a month deal. She's my CFO.
Yeah.
Through all the trades I go through, and she puts the calls to me. So
that's funny. We do the same thing. We do at the beginning, the first or second of every month. We do our budget. I mean, we still do our same budget that we have on a little Excel spreadsheet. And then she's like my IRS auditor. She's like, okay, so what happened? And I'm like, okay, I got to explain it to you.
So, So trading plan to me. Get in a routine. Trading plan.
Yeah. Well, I think
that would be my good to everybody.
Yeah. I think the quote there that I always think about is, if you don't know where you're going, any road will get you there. Right. And that's the idea.
That's true.
That's it. So, well, good, man. Well, hey, I really appreciate you coming on. Like I said, if everyone wants to, reach out to you, they can do it obviously through the forum and on the website. We'll have everything linked up on the show notes page, optionalpha.com/show107. That's just the number 107. But man, Rob, MACDDaddy, thank you so much for being here. I really appreciate it.
Thanks for having me on board. I just want to end with all for one, one for all.
There it is. I was waiting for you to kind of get that in there. So that's good. Awesome, man. Well, listen, we'll talk to you soon. Thanks.
All right. Cheers.
All right. So listen, I truly hope you guys enjoyed today's show and our interview with Rob and MACDDaddy. And I know that you got at least one thing out of it that you can apply right now to make you a smarter, more profitable trader investor. I love the concept of the wheel. I think it's just a great framework to trade around if you want to be trading the stock. And if you want to kind of work in that wheelhouse per se, if you want to kind of deal with the stock and do that, I think it's a great strategy to start implementing. So as always, you can get additional resources and links mentioned in the show and some of the related training and video training from today's show by going to optionalpha.com/show107. Again, that's just the number 107, optionalpha.com/show107. And until next time, happy trading.
Thanks for listening to the Option Alpha podcast. If you liked what you heard, please drop by iTunes and leave a rating or comment. Plus, you can get everything: free email updates for future shows, transcripts, video tutorials, case studies, and more. Just visit our website at optionalpha.com.